All right, welcome back for another episode of Carnivore Trades. Today is Friday, May 5th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So market's gapping up, pretty much a gap and go day. Trend day up, whatever you want to call it there. Spiders up 1.85%, Q's up just over 2%, so a big day there. The Dow up 1.63, Russell up 2.38. That was the big winner there. Still in a pretty weak technical position, all things considered, but it did have a nice day, mainly because of the KRE coming well off the lows there. So some bank fears somewhat quelled here. You did have a nice candle there yesterday, little tail candle with good volume. And, you know, again, like we said, we went into a lot of weekly and monthly chart support here. There's your turnaround candle, green bar, and then off to the races. So that's usually where the institutional money is going to be sitting. When you see that, I just think there's a lot of sellers here at 40 and 41. So I just don't really see a ton of upside there. But, you know, it got a nice bounce and that kept the market afloat today. Obviously, everybody's going to talk about Apple. I think Apple was a lesser story here, really, than the jobs number. If we go to our after hours here, you can see Apple had a nice pop, right? Big pop, and then it held the gains and continued higher. If we just look at the ES, this is what it did on Apple. It's not like we had fireworks going off, and the NQ really about the same. The NQ actually reversed and went lower for a minute there in the overnight. By the way, we did leave a little gap there on the overnight NQ, so that's interesting. We'll see. Usually those small gaps can get filled, but either way, it was less to me was about Apple than the jobs number. So this is your 10-minute candle. Right after the non-farm payroll came in, that came in like way higher than expected. Why didn't the market sell off? Well, the answer is now market is worried about recession a lot more than it's worried about rate hikes. And actually, the market's actually trying to price in rate cuts now, as low as 3.7 for the Fed funds futures at some point later this year, early 2024. I think that's way wrong, but that's a whole nother story. But right now, you're seeing the market kind of worried about recession more than rate hikes, and that's evidenced here. We had one candle dip, and then it was really just off to the races. So, the market here, and one kind of piece of evidence that, take a look at crude here, energy. What's this been doing the last 4 days? I had a huge dump the last 4 days and then got a pop today with the spiders. Even natural gas, it rallied up last week with the spiders. 1, 2, 3, 4 down, and it got a pop today on Friday. So you can make a case that right now, bad news is bad news again, and good news is good news. And we got a good jobs number, so the market kind of likes that right now. Obviously, yes, Apple helped. Obviously, the KRE getting a pop, getting some relief, obviously helped here. But in the near term, I think the market is finally coming to the realization that we are going to recession. I believe the next shoe to drop would be that the Fed's not going to cut rates to what the market thinks they're going to do, because inflation is going to be sticky. And in fact, I think if I'm not mistaken, the next CPI, which is on Wednesday, which I think at this point they probably hold us up into, that's still pricing in around 5%. So that's telling you right there, even the consensus is on the stickier side. All right, we're not seeing it drop by 1%, every time. It's pretty much in line. I could be wrong about that, but it's very close to the last one, which was 5.1, I think, with the consensus, and it's right around 5 here. So that's something that's going to come into play when the market starts to care about it. But for right now, for the technicals, we don't care. All we care about is this broadening pattern. And you can make a case we kind of kissed it yesterday, not really so much, but kind of a 50 MA test as well. Didn't quite get there, but you can make a case it's kissed it, right? I like to call it that. And if we rally up, again, we've been just looking. I mean, it feels like we've been talking about this for a while, because we have. It's been probably, let's look at the weekly here, 1, 2, 3, 4, 5, 6 weeks now we've been talking about this gap fill. It's not been filled, and it coincides with this upsloping trend line. So that's where the market could want to go. We could get there on CPI. So that's certainly a possibility. The triple Qs here, again, they have filled that gap, and now getting a bid here, and this has got the same type of upsloping trend line there, which is also a rising wedge. So we'll be careful of that moving forward. I don't see, I see a little bit less upside in the Qs than the spiders, but it is what it is. And a lot of that now is you have big tech earnings out of the way. So I think, you could get some energy names to do back and filling. If you get the financials to kind of cool off a little bit and kind of, get some kind of dead cat bounces and get some rallies in there, you could get more of a rally out of, those types of sectors, maybe XLV, XLV holding up okay, but right into that 618 too. Nice little back off there, but tech less so upside is what I'm thinking here than the spiders, and I've made that kind of clear over the last couple of weeks. But either way, markets are hanging in there, and we reclaimed the 20 moving average on the daily, so it's in decent position here. We never close below this low. You take this low out now, then the bears have control. 400, you'll have a whole round number pierce. I don't know if that's going to be that major though, considering we've already hit 404 twice. And especially if you came up here, let's just say we don't get up here and we go have a lower high, we're probably going to go straight to 395, which is going to coincide with the 200 moving average. So those are kind of the levels there to watch on the downside. On the upside, I just don't see us getting through 422 at this point. But we're hanging in there. I feel like I've been saying that for 6 weeks. We're just kind of stuck sideways, and that's where we are. Market still no conviction and lots of indecision there. Weekly close, obviously, we did come nicely off the lows, little kind of hammer candle. One thing I'm watching here too is it's very reminiscent of that move in November where we had that kind of big candle and then kind of like a broadening kind of pattern here. So we were going up and consolidating rather than sideways. And then we kind of rallied down and we got stuck here. And then we had that big pop and then we came back in. So something to watch for next week. Again, CPIs could be a catalyst. Maybe we get a surprise. So we'll see what we get. Overall, those are really the levels to watch, and that's really all it comes down to, honestly. The IWM here below all four major moving averages. This is still on the weaker side. Still not a good sign here for the overall market. We had that wedge breakdown. It did save, they did save the lows here by the end of the week, but this is not a pattern of strength. I mean, this is definitely weak. On the monthly, it's weak. The daily is weak, and the weekly is weak. So not a good sign there. For the IWM, the Dow did come nicely off the lows. Just backed off the 20 MA, kind of a sloppy pattern here. Maybe it can get up to 343 one more time if they pump us up, but that's really all I see there for the Dow at the moment. Over here to the semis, and I had my semis chart, if you noticed, the SOX there. Today, they did do a split, so it's still a little messed up on Thinkorswim here. They did try to fix it. You can see here in the middle of the day. I'll just manually fix it if they don't do it over the weekend. They did fix it on the daily though, but my trend lines are now gone. So my trend lines are all way up at 200, whatever the last 250, whatever the last number is. So I'll have to put those back on, which I'll do at some point here. But either way, semis, nice little rollover, and then we had a nice bid. AMD did get a nice bid today, so that was it actually gapped down, which is interesting. So it gapped down there right into that 100 MA, right into that pivot high from yesterday, and then boom, took off to the upside. So semis holding up okay. Nvidia was also having a nice day as well, up 4%. So we'll see what that does here. That probably wants to test above 290 again. Really, really top heavy stock, as you guys are all aware. But semiconductors hanging in there okay. They tested. It's not 250, it's 125 now. But that's where it went, and stalled out right into the 50 and 20 moving average. So, if they can get, there's some consolidation it's got to do here to get through this kind of resistance. But, it had a nice pop, so we'll respect it for now. I just think they're all very top heavy, though. Cloud software also bouncing up 2%, still weak, still below 295 in this pivot. Not a great chart, so all things considered, it's definitely on the laggard. It's definitely on a laggard name here is cloud software currently, but it did come off the lows. So Dow Transport's here up 2.13, so nothing terrible. On the hourly, you could make a case that you've got this, you got this big move, and it's kind of trying to bull flag here. Even on the 4 hour, that 4 hour is probably a little bit better. If this shapes up, it can get one more pop. Again, I just don't see much through 14.6, maybe 14.7 currently, but you do have that little trend line right there. We'll see what that does going into next week. So Dow Transport's hanging in there okay, but again, lower highs, not a good sign for the overall market. You want the Dow Transports to be leading and the semis to be leading, and neither of them are doing that right now. Cloud is not leading either. So anyways, over to bond land. So interest rates coming back down. or excuse me, back up. Bonds getting hit, the notes getting hit. Jobs number hot, makes sense, right? Nothing out of the ordinary there. 10-year popping up a little bit, 2.83%. 30-year up 1%. I do now have a chart of the 1 year. So, drum roll there. 4.5% opening all the way up to 5.5%. So, I mean, I don't know, if is that bad or good or whatever. But anyways, market doesn't care right now, but it will eventually. You see the 3-month there, big surge and then coming off the highs. Still have a pretty inverted yield curve. If this starts to normalize, though, it means the recession is starting. 3-month and 10-year, wicked inverted, hit an all-time low, and I mean that. So, and this is going way back here. Well, this only goes back to the early 90s here, but it is an all-time low there on the 3-month, 10-year. So, I'm sure that's nothing. But in either case, there's that 1-month chart now that you guys have been requesting there. By the way, if you haven't done so already, like, comment, subscribe to the channel. In any case, let's get over here. So I don't see a ton of big picture downside in bond yields, but right now they're just kind of in a holding pattern. XHB green on the day, so that's only allowed to have 1, maybe 2 down days in a row. So that's hanging in there okay. And then ITB, same thing. That trend is up, still really strong here, very, very top heavy, but holding up okay. VNQ, had a nice little pop up, almost 1 3/4. I still just don't like this pattern here. Yes, it's an inside bar on the weekly, but below the moving averages tells me there's not a lot of upside. It's gonna need a lot of help from the rest of the market in order to continue higher. XLF up 2.5, so nice pop there. Again, if this continues to hold up, that can help the SPY, even as big tech maybe kind of stalls out. And before I get too far ahead, we should talk about Apple a little bit. We do have this rising wedge. It had a fake breakdown yesterday. That's why I never trust patterns ahead of earnings. But you did break through that. Next resistance is 175. I think it wants to pierce that at this point. And then you've got this kind of red bar above that. So that should be good resistance here. But, Apple, Microsoft, Google, well, not so much Google, but Apple, Microsoft, Meta, some of these names are just NVIDIA, ridiculously extended in front of a recession. So I just think their multiples are ridiculous at this point. But either way, Apple, I just see less upside in tech there. But either way, XLF up 2.5. It'll have resistance around this necktie, 20 and 50 moving average. KRE, I've already mentioned that. I just don't think it has much. I mean, this is a lot of consolidation here. People who tried to buy the bottom, they're stuck in it. So that's where they're going to turn into sellers. Same thing with KBE, right around 36. So that would be good resistance there. Then XBD had a nice pop, so up 4%. I kind of alluded to this yesterday. Just I said they might save it by the end of the week, and they did. So nice bid off the lows, but still just not a pattern of strength, right? So this has got a lot of work to do to fix that. But they did save the 420 area by the end of the week, so we'll respect it for the time being. Crude with a nice pop here, up 4% on the day. Classic double bottom, really oversold short term. This should work its way into the 74, maybe max upside 76 handle here. Big picture, I think energy, specifically crude and crude plays, are going lower. Not as low as some people are calling for. A lot of people are calling for the recession to be a traditional recession, and we're going to have the jobs market crashing and commodities crashing. I'm not in that camp. I'm in the stagflation camp. So there's much, much higher floors in these, but I do think crude does go lower here. In the short term, it's got a nice chance to get a pop. XLE also defending that trend line right there. So that should work its way up to 82 to 82.50. From there, if it makes another lower high, do not buy this trend line, because that's one too many hits with lower highs now. So this will break, and I think you got to go down here and test this area, which should be good, really good support there on the XLE, and probably even better around 65. But don't trust that trend line here. But in the short term, it's probably good for a bit up to that 82 handle. XOP, same thing. We'll say 125 there. And OIH, it hit that double bottom. You got to get through this red bar here on the daily, and then you can go up and test the 200, maybe 280. But that's all I see there for the OIH. Nat gas, not a lot going on here, up 0.75%. And it came off the lows there, had a pretty good pullback this week. And it's just trying to hold this area. Big picture, I still think lots of accumulation going on down here at the lows, but still continuing to kind of languish. And it's interesting how now, and I just mentioned at the beginning of the video, natty and crude both kind of positively correlated to SPY right now, whereas for a while it was like specifically nat gas. Well, crude was definitely inverse correlated to SPY, and nat gas was more inverse correlated to the euro. I still think that'll be the case in the not too distant future, but right now market's definitely got its eyes on recession more than anything else. But that euro there, and really the dollar, which we're going to talk about right now, again, I still think it's got to get to 100, and I think it's going to get there. So especially if you get some type of big move on CPI next week, we'll see if that can be the catalyst. But no real changes here in the DXY. I'm still looking for that 100 handle. Gold, obviously we mentioned coming off the highs down 1.5. Still held trend though, holding that 20 moving average there on the daily. I would have liked it a little bit better if it made a slight new all-time high there. I think it may still do that based on the dollar going to 100. So we'll see what happens there, but it did back off pretty sharply off the highs there, and silver, same thing, down 1.25%. Although it did, again, it did hold that 20 moving average there on the daily. So still in a strong uptrend. I just still think it's very, very lofty and overbought. On the weekly, platinum held the 1040. So good area there, pullback, pivot. This can probably get to, I would say, I'm just going to take a little fib here. This could probably get to 1100. So that's just a 50% retrace. If it's strong, it can get to 1110. But you'll have some resistance at double top. Ultimately, I think this wants to go and test 1200. And he held that green bar low by the end of the week, and he held the 1040 area. So I like it right now. It's hanging in there okay. Copper here came off of the lows. Still have a bearish inside bar on the daily. I still think that's got to go to 375. But knowing the way this behaves, it'll probably not do that and go to 4 first. So we'll see what copper does here moving forward. Over to Bitcoin. So Bitcoin behaving a little bit more like a risk asset. So more like kind of leveraged NASDAQ now, whereas before it was, or recently we should say, it was behaving as a safe haven like a digital gold due to bank fears, obviously. Now today it's up, 2.36%. ETH actually up pretty nicely, almost reclaiming that 2,000 handle there. Just little nuance, right? So KRE up, Bitcoin up. So maybe that's starting to break down a little bit. Again, big picture though, Bitcoin, we'll be looking for, let's use the monthly here, looking for this monthly 20 MA and that red bar test. That's where really the big resistance is on Bitcoin, but it's holding up for now. And again, if we get some type of a pop here, watch over the weekend too. Bitcoin's been a slight leading indicator lately. So if it starts to get a bid, maybe the spiders get a bid. But again, targets for BTC have not really changed at all. Neither have the spiders. Nothing really else to say there. We had a nice little pop off the lows here. A little gamma squeeze there, up 1.85%. Again, broadening pattern. That's really the levels to watch. If we break 404, we can go lower, and the bears will be in control. Until then, they can keep this market buoyant. Anyways, guys, gonna wrap it up here. You guys take care. Don't forget to come find me on carnivoretrades.com. Subscribe to the channel. I'll talk to you all next week.